you're watching Buy Now, Sell Now on ET Now with me, Shreyansi Singh and Cheryl D'Souza, and this is the show where we get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But first things first, Cheryl, we've got to take a look at the markets, and a tinge of red is what we have on our hands.
Absolutely. A very good morning to you, Shreyansi. First things first, like you said, a very happy birthday to you. I must wish you on air, wishing you a very happy birthday. Hope you have a great year ahead and a fruitful one. But if you look at the markets, definitely, fruitful gains coming in for the markets. Like you said, tinge of red, that's the way how it is looking like at this point in time, because we are flattened out from the day's highest point. Right now in the negative territory for the benchmark indices. Let's take a look at what Nifty Bank is doing, and if the print there is a bit different than what we are seeing in the benchmark indices, and it is because we're seeing a shade of green coming for the Nifty Bank. It has recovered from the day's lowest point. The advanced decline ratio at this point in time is neck to neck, so it is 1:1 ratio coming in for the advanced decline ratio. Talking about the list of gainers, you have HDFC Life reacting to its numbers and the management commentary. The stock is trading higher by about 2%. Top gainer on the Nifty, followed by Grasim. You have Hindalco. HDFC Bank also among the other set of gainers, and Dr. Reddy's as well, holding on to gains in excess of about 1%. But on the flip side, you have Trent that is down about 2.9%, Mahindra, Nestle, Hero MotoCorp as well as Aisha Motors that's under pressure. So looking at the print that you're seeing on the Nifty losers, suffice to say that Nifty Auto Index is the top sectoral loser at this point in time. You have Pharma, IT also taking a bit easy, while on the flip side, there's metals holding on to good gains. PSU sector also holding on to a shade of green. So that's the way how the markets are looking like at this point in time. Pretty lackluster trade today, actually, Shreyansi.
Well, absolutely, and we do have Kunal Bothra who's joining us right now, as well as Lancelot, Dcunha, ValueX Wealth Connect as well, who's going to be joining us shortly as well. Kunal, I'm going to come to you first, because what are you making in terms of the move that we have on our hands today? It's quite subdued. So which are the sectors that you're watching out closely for then?
Yeah, it's been a subdued session for the markets. I think since last 4-5 days, the bounce has been a bit more shallow. I call it shallow because not many large cap names have seen a big follow through or breakouts for themselves, except for a few odd stocks like the infra names like Siemens, ABB, etc. These stocks are the ones which have seen a follow through up move. But most of the other stocks are now actually trying to show signs of time wise, price wise consolidation. So I think on the back of it, my sense is that the markets would probably get back into a trading range. So 25,000 now remains to be a pivot for the index. From a short term view, I would expect 200 points swing for the Nifty over the very near term, so which means 25,200 could act as a resistance and 24,800 broadly as a support.
All right, with that, let me kickstart with taking all of the stock-related queries then. We have experts joining us, Kunal Bothra on the technicals, Lancelot, Dcunha, who's joining us on the fundamentals. Once again, good morning to both of you gentlemen. And Kunal, let me kickstart the queries with actually Reliance Industries, because we've been having a lot of queries coming in on Reliance Industries day after day for the long term, whether it's a good counter, which the answer by default consensus would be a yes, I believe. But talking about this one for the short term, we have 300 shares. We have a viewer who's bought 300 shares of Reliance at a price of 3,000 rupees per share last month in order to make that shift to the large caps, because we saw the sectoral rotation. You saw people or investors parking their money now in the larger caps than instead of mid caps. So our viewer actually went ahead and purchased Reliance Industry with that thesis at a price of around 3,000 rupees per share. Now he wants to know, was it 3-month view or was the other alternative? Since we talk about longer term view of Reliance Industry, for the very short term, what's your view?
So from a very short term view, my expectation is that the stock should stabilize at current levels. So I think 2,700 mark is seems to be a very good support for the stock. Now what's actually positive for the stock, or rather which could play out positive for the stock, is the divergence the stock has had from its long term average. So for example, the 200-day moving average for Reliance Industries is at 2,910 odd mark. The stock is currently at 2,690, which means there is a divergence of almost 220 points for the stock from its long term averages. Historically, divergences of 10%, maybe at max 15%, I think have resulted into the stock finding a bottom for itself, staying there for some more time and then getting back into a mean reversion phase. So net, my sense is that the stock over the near term should stabilize at this 2,700 mark. That could be a point where you may see maybe a 30-40 pointer dip, but that's broadly a range which we expect for the stock. But once the market gets back into stabilization, I would believe that Reliance Industries can also make a strong comeback.
All right, and that's about big boy Reliance. Lancelot, I'm going to come to you with the next one because Raman is writing to us from Thrissur in Kerala, and he wants to know about Union Bank because he has 10,000 shares rather of Union Bank at a buy price of 148 rupees. So what is your take coming in when it comes to Union Bank then?
So, a lot of the public sector banks had moved up significantly in the rally when there was a lot of buying in both public sector banks and public sector companies. And if you look at valuations, they had gone significantly higher than their average valuations over the last 5 years. Now we are seeing that with interest rates and deposits remaining a little firm, it is net interest margins on the banks is likely to get compressed. So those banks which have strong retail franchise will continue to grow that retail franchise and enjoy higher net interest margins. But banks like Union Bank will start to see some pressure of these higher rates on the net interest margins, and hence going forward, the financials may not support the higher valuations. So you could probably see valuations, if it comes to around 95, 96 level, that would be fair value at which you can, buy into the stock. But having bought it at a much higher price, now the option is either to look at moving into stronger banks which have potential to sustain this difficult financial conditions and then show improvement. So State Bank would be one, HDFC Bank would be another, who would have a much better franchise. So either he has to wait for 95 to average out at lower levels, or look at switching to the good banks who will not get impacted with the future. Okay.
All right, this one is coming from Naveen. He's writing to us from Pune. Kunal, he wants to know the right price to go ahead and buy Maruti Suzuki again. I believe that he's already purchased this one. Not sure he exited out of it or wants a re-entry into it. But what's your take on Maruti?
So I believe that the recent impact which you're seeing is of course based on the comparison with respect to the Hyundai IPO. I think that's one of the major reasons why you're seeing the stock going to a sudden weakness, because prior to that at 13,200, 300 levels, the stock was on the verge of a very big breakout. So I believe that it's an immediate retracement which the stock is going through. Eventually, these stocks, when they see such kind of a sudden news flow, they get back into a mean reversion phase. But once that gets arrested, the stocks, they come back to their previous breakout point of, in this case, it will be 30,500 for Maruti over the maybe near to medium term. So I think I would probably believe that closer it is towards the long-term moving average, the 200-day moving average, the better would be the buy price. Currently, the 200 DMA is at 11,990 levels, so which means 12,000 broadly could be a very good entry point on the spot levels for Maruti.
Alright, so that's the take coming in on Maruti Suzuki. Tell you what, Kunal, though, I'm going to come right back to you because we do have Gaurav Mahindra who's writing to us from Indore, and he wants to know about IREDA because he has 4,000 shares purchased at a buy price of 232 rupees. What is your take when it comes to this one then?
So would suggest a hold on the stock as of now, but not a fresh buy or an add at current levels. The stock is going through a time-wise, price-wise consolidation. So a rally which was quite huge for a stock like IREDA, from 2 digits to a point when the stock went to I think 300 plus levels. It's going through a time-wise, price-wise consolidation. The first 2-3 months we've seen the stock correcting from 320 levels to I think around 200, 210 odd mark. Now it's going through a time-wise consolidation, which I believe could extend for another 2-3 months at least for the stock, which means 200 could act as a pivot for the stock and broadly say 240 to 50 as a major resistance for the stock. So I think it's trying to establish a trading range of 15%, 20% at current levels for the stock. I would believe that lower end of this range, 200 mark, could be taken as an entry point or a point to average further. Otherwise, hold on to it from a medium term play at least.
All right, let me take this next query then. This one is coming in for our viewers who not written his name, requesting all of our viewers who write to us, please do mention your name. It's easier for us to address and you'll also know whether we've taken your query or no. Our viewer has about 2,000 shares of Yes Bank at a price of 21.4 rupees per share actually. Lancelot, he wants to know for the next 2 years, what should he do with Yes Bank? What's your take coming in on Yes Bank? Because this one has seen a good ride, actually saw a good recovery, but from there on, it's not been able to surpass those levels of about 24-25 rupees per share mark.
Yeah, so like I mentioned earlier, the banking industry is seeing a bit of consolidation, and with the interest rates and the scramble for deposits by banks is going to put pressure on net interest margins. Now, while the financial position of Yes Bank had improved over the last couple of quarters, with the net NPAs also getting arrested and its capital adequacy being beefed up by all the subscription that was there, the valuation of the bank, was trading at a very high multiple as compared to, say, banks like State Bank of India or even HDFC Bank. So even today, these alternatives offer better risk-reward ratios. So one should look at moving into these banks which are stronger on a fundamental basis, and valuations are similar to what they are with Yes Bank today.
That's a take coming in as far as the banking space and Yes Bank in particular is concerned. But time now to take a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries, so don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get to answers for all of your stock-related queries. So let's continue taking the queries then. And this next one is coming in from Vivek. And Vivek wants to know, Kunal, IT sector, whether it's a good sector to ride on for the next 2 to 3 years and invest fresh money into that sector. And also any best stocks that in the mid and the small cap space that can be winner in this rally.
So I think a staggered approach is a better, strategy to try and buy the IT stocks, because you're trying to buy these stocks at the fag end of the price rally at the higher end of the price trend for themselves, which means that there could be a point where, in case if these stocks also correct by say a margin of 5%, 10% broadly after a 30% kind of a rally in the last 6 months or so, I think there could be a possibility that you may be buying at the higher end. And the second, the most important part is that we still believe that the large cap IT stocks have not shown the kind of mojo they have shown in their recent past. So which means, for example, currently TCS is lagging behind. The stock is on the verge of breaking below its 200-day moving average. Infosys, HCL Tech, Tech Mahindra, they are the ones which are still relatively strong. So when you have this kind of a disarray in terms of the market internals, we generally believe that the sector gets into a time-wise, price-wise consolidation. So I would suggest that buy in staggered approach for IT names. You can initially concentrate on the larger cap IT stocks. So far, the outperformers are the likes of Infosys, HCL Tech, Tech Mahindra. You can concentrate there as of now. And from the mid cap IT stocks, Coforge has been something which I've been highlighting over the last 3-4 months. That's a chart which still looks attractive. But as I said, that these stocks are at the higher end of the price trends. So buy on dips is a better strategy.
All right, there you go. Those are the top bets when it comes to the IT pack. But the next one that we have is from Durai. He's writing to us about KEI Industries. Lancelot, I'm going to come to you. He wants to know, he has 50 shares at a buy price of 4,178. What is your view when it comes to this one then?
So I think KEI, while order growth has been good, I think given the financial situation, the pricing valuations are relatively high still. So one can either hold on to the stock or maybe wait for maybe another 10-15% correction before one can add further to this company.
This one is coming from Satyaveni, writing to us from Vishakhapatnam. Is a long-term investor, wants to know about Bata. 150 shares at a price of 1,852 rupees per share. Should the viewer hold, exit, or average? What's your take coming in on this, Lancelot? What's your take on Bata? Because the footwear industry has been under pressure.
We did see the footwear industry under pressure in the last 6 months or so. And I think given that whatever information we are getting in terms of rural demand from the market, it seems like rural demand or even the demand for consumer appliances, etc., has not really grown that much in the last quarter. So with the festive season around the corner, one will get a better idea at the end of this quarter as to whether there's any significant gain in terms of or a demand has started to pick up or not. But given that background, I think one should be rather cautious in terms of buying, and it's better to wait for the next quarter and then look at the results and then decide whether one wants to, whether the trend has been changed for a longer term period.
Alright, so that's the take coming in as far as Bata India is concerned. Reshma Bhatia is also writing to us, Kunal, and she wants to know about Adani Enterprises and Adani Ports because she's been invested for the last 4 months, not seeing much of a move coming in when it comes to both of these counters. So she wants to know if she should invest those funds in NTPC, Tata Power, JK Lakshmi Cement as well as PCBL.
So I think on Adani Enterprise and Adani Ports, tracking these stocks over the last many years, we realize that it's very difficult to anticipate that when would the momentum pick up, because these stocks are prone to a lot of news flow. There's a lot of events which surrounds the stock price, and that's where you generally tend to see these stocks gaining momentum. So as of now, these stocks are just about hanging around their 200 moving averages respectively, say by a margin of few percentage points plus minus. So I believe that this trend may continue for the stocks over the near term. At least that good part is that the volatility which was there for the Adani Group of stocks, which is seen in 2022 odd, I think that kind of volatility is now behind, and we are seeing these stocks into a lot more range-bound price action. So these stocks would eventually get back into a turnaround once the market also finds its feedback again. On to the other names which you mentioned, I strongly believe that NTPC, Tata Power are the ones which you must have as part of your longer-term core portfolio, because these stocks are looking very attractive on the long-term chart. So the beta of the stocks have dropped down significantly. NTPC, of course, is one of the lower beta stocks from the larger cap Nifty 50 basket as well. Tata Power has done reasonably well at current levels of 460, maybe a bit elevated in terms of an entry, but I think again a stock which you can probably keep as a part of your portfolio. PCBL, etc. Many of these stocks are high beta, and it's I think best try and stay away from these stocks as of now. Wait out for a correction and only then look to buy or add them.
Alright, this was from Vidya from Bangalore. Lancelot, she has Bajaj Housing Finance that she got the shares allocated actually in the IPO. She wants to know whether she should book profits, add more, or hold on to this particular counter. What's your take coming in on Bajaj Housing Finance? Have you actually tracked this one recently listed counter?
Yeah, so I think Bajaj Housing Finance is, one of the most efficient housing finance companies. We've seen a sizable growth coming in the last year or two, and I think the growth will continue for the company. So if you look at the housing loan penetration and the market share of Bajaj Housing Finance, you are seeing a good opportunity to accumulate this stock. Normally after an IPO, there's an immediate spike, and then there's a lot of people who book profits out for listing gains. I think you have to wait, and if you see the prices settle down, one should wait and accumulate. Bajaj Housing Finance should be in the portfolio for the next 3 to 5 years. You will get very good returns from this stock.
Idea to bet on Bajaj Housing Finance, and that's the view coming in from Lancelot. I'm going to come back to you, Kunal, because we do have Sudha who's writing to us about Zydus Life. She has 100 shares at a buy price of 600 rupees. Now, she does have negative returns at this point. So, what should she do? Book out or hold at this point?
I think from 600 rupees, if you've purchased, the stock is at 1000 plus levels, which means you're still trading in the money in terms of profit for the stock or the purchase. The concern, yes, for Zydus Life is that in the last 3-4 months, the stock has dragged and corrected itself. So I think it's gone through almost a 30% correction broadly from 1300, 1350 mark to now 1000 odd levels where it's trading right now. But also I think the good part is that the indicators have stopped falling very aggressively for the stock. So which means that there could be a potential that the stock may just consolidate, find a bottom closer to this 200 moving average for itself. So I think if you've purchased at 600 levels, you're sitting at good profits. I think you should continue to hold on to the stock. In case if the rally resumes for the stock post this phase of correction and mean reversion, the stock could come back to that 1150 mark at least. That could be a better point where you may look to take out some profits.
All right, let me take this next query coming in from Jay Krishnan. He wants an entry level for Bajaj Auto and M&M for the medium term, Kunal.
So Bajaj Auto, a stock which has done exceptionally well. I would suggest you to wait for the stock to fall below its 50-day moving average at least. That could be a better entry point. Yes, it's been one of the best movers, but we've seen moderation for so many of the auto stocks. We were discussing Maruti just some time back. The stock from 13,500 is almost at 12,200, 300 levels. Same is the case with Tata Motors. From a fantastic uptrend towards 1100, 30, 40 mark, the stock is now almost closer to that 900 levels, which means that we've seen this 20% odd correction shaping up into many of these auto names. Same could be the case with the likes of Bajaj Auto. So I would suggest to wait out for a point where the stock corrects by say at least another 1000 points from current level. So 10,000, 10,500 could be a better entry point for Bajaj Auto.
Alright, so there you go. That is about Bajaj Auto. Lancelot, I'm going to come right back to you because we do have Samba Sivarao writing to us from Hyderabad, wants to know about LIC Housing Finance. Already has 220 shares at a buy price of 725. What is your view coming in when it comes to LIC Housing Finance?
LIC Housing Finance, we've seen that the margins are squeezed because a large portion of their book of the borrowing comes from corporate bonds and support from the bond market. So I think one has to look at alternatives. One would, prefer to invest in a Bajaj Housing Finance as opposed to an LIC Housing Finance because valuations are almost similar. They're trading at almost similar price to book multiples. So it may be an option to switch from LIC Housing Finance to Bajaj Housing Finance.
All right, so that's the take coming in on the housing finance companies. On that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock related queries then. And Kunal, the next one is for you. This is about Kaynes Technology, and we have an investor who's invested at a buy price of 5,400 now. He's mentioned that he has 50 shares. When it comes to this one, should he book profits or hold at this point?
See, I think it's a better strategy to try and book profits, maybe not at current levels, but in case if you get to see a 5,800 or 5,900 mark for Kaynes Tech, that will be a good level for you to book. Because over the last 1 year, 1.5 odd year, the consistent pattern which you've seen for Kaynes is that the stock completes a phase of mean reversion, comes closer to the 50-day moving average, the trend settles there for the stock, and then from there you see a bounce back and the stock eventually get back into a recovery. So it's always best to try and time these stocks in terms of an entry point. A better timing for a stock like Kaynes could be closer to this 50-day moving average. Currently that average is placed at 5,050, 5,060 mark for the stock. So at current levels you can consider booking out profits, or maybe at slight higher levels, depends on if there is a bounce into the stock price. 5,000, 5,050 could be a better level for a re-entry point for Kaynes.
All right, this next one is coming in from Bindu, wants to know about DCB Bank, where she's making about 20% profit actually in the holding. Wants to know what's the medium-term view as well as on HDFC Life, and does she need to go ahead and reallocate the funds in DCB Bank into HDFC Life or so? Two companies in different segments actually. What's your take, Lancelot? What to do with this one?
I think that, DCB Bank, like I said, I think it's, all the banks are going to face similar problems as far as raising of deposits and net interest margins are concerned. So it's obviously a much better option to move to a stronger bank. Since you are in the profit, you can move to a stronger bank like either HDFC, Kotak or SBI. And as far as HDFC Life is concerned, I think long term, one is seeing very good growth as far as HDFC Life is concerned. We are seeing consistency in terms of the growth despite changes in the rules for income tax. People are shifting to the new tax regime, so there's less dependent on tax benefits for selling life insurance policies, and yet we've seen the business as well as the profitability grow consistently. So I think one should look to add or even hold on to HDFC Life Insurance, because long term one will see much more higher growth levels on this stock.
So that's about HDFC Life. Kunal, I'm going to come to you with the next one because we do have Subramaniam who's writing to us from Chennai. He wants to know about Trent, and we also have Pratiksha who's writing to us from Muscat, also wants to know about Trent, as well as Arvind Fashion. So what is your take coming in on both of these counters?
See, I think it's very difficult to try and gauge the trends for these stocks because, on a monthly chart, the 14-period RSI is 97.5 for Trent. And, I've seen periods where, stocks RSI has been 80, 85, 90 plus, but 97.5 for a stock like Trent is a huge kind of an extreme for the stock. So I think at such readings of RSI, I would, frankly not suggest a long-term investment for a stock like Trent. You might have those phases where the stock can keep on rallying, continue the momentum. But when you have such kind of a steep levels on the longer term charts, making money from a longer term basis becomes very, very difficult. So I think purely on that aspect, I would suggest an avoid on Trent.
All right, that's your take coming in on Trent. But Kunal, what about the other counter that Pratisha has? She wants to know about Arvind Fashions for investors 6 months. Does it look good if not Trent?
Well, yeah, Arvind Fashion is a good stock which you can look out for. Even ABFRL, a stock which I think is at 335, 345 odd levels approximately. I think that's a chart which is looking attractive. Both these stocks are coming out of their own phases of consolidation and major price correction which had happened for these stocks on a longer term basis. So Arvind Fashion at 620 plus mark. ABFRL, as I just mentioned, the price range. I think both of these charts are attractive. So you may probably look to consider shifting on to the from the earlier stocks to these names.
Right. What about Cochin Shipyard, Kunal? Because we have Najib from Qatar actually, who is has this in his family portfolio. He has Cochin Shipyard 2,000 shares at a price of 440 rupees per share. He's saying that it has been down about 45% from July highs. What should he do with this? Do you think it's time for him to accumulate? He is sitting on a profit.
Well, yeah, I think it's a good time to accumulate. But I've seen historically that when there comes a point when the stocks come into a consensus kind of a buy zone where the trade looks a lot more obvious. That's the time when these stocks they continue to consolidate and they spend a lot of time at a particular range. So price wise, yes, I think this 1500, 1600 mark for a stock like Cochin Shipyard, especially from those highs of 2900, 2950 levels, I think is a very attractive range. But you have to be ready for the stock getting into a time-wise correction, maybe spending another 3 months, 6 months into a trading range. That could be possible for a stock like Cochin Shipyard. So if you're okay with that, then I would believe a buy on dips approach from current levels could be a good strategy.
Alright, so buy on dips is the recommendation when it comes to Cochin Shipyard. Lancelot, just curious to know your take on Cochin Shipyard as well then.
From a fundamental perspective, these stocks had risen many times based on announcements that they have got huge orders from defense in terms of building frigates and various, destroyers, etc. But all these are actually long term because it takes sometimes more than 20 to 30 months before you can actually build some of these things and deliver them. So I think from that perspective, on the fact that they have got good orders, the prices have gone up in anticipation of these orders being executed and profits being already accounted for. So I would say that, it needs further correction before it can become on a fundamental basis rather attractive. Otherwise, there are other alternative stocks which are offering better risk reward returns in the capital goods space in the private sector where, one can look at accumulating those stocks.
All right, so that's the take coming in on Cochin Shipyard. We've got you the fundamental as well as the technical view on this particular counter. Let me take this next one coming from Sunny. He's writing to us from Kolkata. Kunal, he's got ONGC shares at 300 rupees per share. He wants to know what's the short to medium term view coming in on ONGC?
So medium term view is still positive for the stock. Short term wise, the mean reversion is completing for the stock. Maybe there could be a point where the stock may break below its 200-day moving average because of the recent weakness and the sluggishness on the charts. But I believe that maybe 270, 265 broadly could act as a major support for the stock. So there could be a possibility that if the markets drift lower or go into a retest of the previous lows, even stocks like ONGC may go into a retest of the previous major swing lows of 270 approximately. But I think that could be a level where you may look to add further. So long-term charts, medium-term charts, very attractive. Shorter-term wise, maybe slight bit of more correction.
Alright, so that's about ONGC. Lancelot, I'm going to come right back to you because we do have Raju Reddy writing to us from Bangalore. He wants to know about Varun Beverages. 4,000 odd shares is what he has at a buy price of 582 rupees. What is your take when it comes to this one?
So I think this Varun Beverages is in a growth mode. They've recently acquired, some franchisees for overseas as well. And you will see they're making large investments in these franchising business for the beverages and that will play out over the next 2 or 3 years. So it is a growth stock. Currently, it is trading at maybe a little higher multiple because there's a growth story ahead of it unfolding. So one should remain invested. And if there is any kind of dip in the stock, use it as an opportunity to accumulate this stock for the long term.
All right, that is your take coming in on Varun Beverages. What's the take on Angel One then, Kunal? Srikanth from Bangalore has about some shares at a price of 3,000 rupees per share. What's the future target for this one? This one is also reacting to his earnings.
Yeah, reaction to the earnings and the price trends is very, very similar to what happened in the month of August. I think for Angel One, when the stock had seen 2-3 days of strong price action. Post that, what followed was almost 2 months, 2.5 odd months odd of the stock going to a time-wise, price-wise consolidation. So after this last 2 days of very steep, strong uptrend, the medium-term charts are attractive, which means that the stock has confirmed a breakout. But then entering the stock at current levels could probably be, inviting some sort of a time-wise consolidation. So buy and dips approach is a better approach. Historically, or in the recent correction, for example, what we had seen that Angel One has, generally corrects to 50% of the range of the rally with the stock sees. So from current range of say 2600 to 3300, 350 mark, we are looking at a potential 700 point range, which means a midpoint of this range could be at 3000, 3050 levels. That could be a very good range to enter.
Alright, so that's about Angel One. Kunal, I'm going to come right back to you though, because we do have Venu who's writing to us from Chennai. And he wants to know about Hindustan Zinc. Now, he's asking if there's another good buy that you have except Hindustan Zinc in the defense pack. And he also wants to know about Hindustan Zinc. What's your take here?
Yeah, from the defense pack, I think BEML, BDL are the two names which I would believe you could look to concentrate on, because these stocks have completed their phase of corrections. Price wise, as I said, that these stocks could be attractive. There could be a point where these stocks may get into a time wise consolidation. So I think if you're okay with that, holding on to it from a long term play looks to be at an attractive territory where you can look to buy. From the stock which you mentioned, Hindustan Zinc, again a very feeble kind of a rally what we've seen in the last 2 weeks for the stock. A time wise consolidation, a better entry range for Hindustan Zinc could be closer to 485, 490 range. So I would suggest to wait out for that point.
Alright, Kunal, coming right back to you, because Arvind Reddy from Hyderabad, firstly he's saying he's indebted to you for Anant Raj. You had given a recommendation on this counter about a year or 2 years ago or so, I believe, or year after year maybe. And the stock has been doing well for our viewer as well. But he wants to know about Kim's. He has about 100 shares at a price of 510.
So yes, Anant Raj was something which I recommended. I think it was almost 2 Diwalis back when the stock was at 100 rupees, towards the point when the stock is currently at 700 plus mark. So it's done exceptionally well. Thank you so much for that. For Kim's, on the short term charts, of course the price history is limited for the stock, only just last 2 years, 2.5 odd years of data for the stock. But so far it looks like the stock is going through a consistent bout of uptrend for Kim's. The stock from 350 levels very recently is managed to come back to that 550 plus mark. So looks like that the stock is continuing to trade higher. But then a buy on dips approach is a better approach for a stock like Kim. So even historically, when the stock has gone through a correction, the correction has been at least 15% to 20% from its swing highs. That becomes a good entry point. So the last 2-3 years of charts indicates an uptrend should be intact, but an entry point could be, I think, when the stock corrects by margin of 10-15% at least from its previous swing highs.
Alright, just a quick note for our viewers. Yes, there was some glitch in that particular stock price. There is some sort of a stock correction as well, as in the price correction that we need to take note of. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, continue to take your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Markets are at the day's lowest point, but let's take a note of what's exactly happening on your screen. As you can see, we have Omar Abdullah, who's been sworn in as the first Chief Minister of the Union Territory of Jammu and Kashmir. You have the Jammu and Kashmir Lieutenant Governor, who is Manoj Sinha, who administered the oath of office in secrecy to Omar Abdullah, along with him 5 other ministers as well. You have the India bloc leaders, you have Rahul Gandhi, as well as you have Mr. Kharge, Akhilesh Yadav, who are in presence of the oath taking ceremony. You also have Mehbooba Mufti, who's attended Omar Abdullah's oath taking ceremony. So he has now finally been sworn in as the first Chief Minister of the Union Territory of Jammu and Kashmir.
Well, absolutely. This was very important, and we've been taking a look at this. In fact, we've been watching out for this, and finally, now that this is happening, this is a very important move coming in, and a show of strength indeed coming in from the India bloc as well. But moving on, then let's continue taking all of your stock-related queries. We have Dinesh, who's writing to us, Kunal, and he's writing to us from Karnataka. He has 2,500 shares of IDBI Bank, and the buy price is 86 rupees thereabouts. So, what should he do when it comes to this one?
Continue to hold on to the stock at least as of now. Looks like the stock is going through a corrective consolidative phase. But again, I think 86 seems to be a pivot range for IDBI Bank. I think just last week or so, the stock had come back to that 85, 86 mark. So I think at current levels, I would suggest a hold. But I think if it gets closer to this 86, buy price of yours, maybe 86 to 90 odd range, that's a zone where you can look to exit the stock price. So as of now, hold, but then closer to your cost price or above those levels is where you can look to exit.
All right, this one is coming in from Vishwanathan Nair. He's writing to us from Kuala Lumpur, wants to know about Tech Wabag. He's already purchased at a price of 454 rupees per share. He wants to know he should look to go ahead and exit this one. What's your take coming on Tech Wabag? Actually, Lancelot, let me take this one to you. Fundamentally, this one has been bagging orders of late as early as yesterday. About, I believe, 1,000 crore rupees order is what Tech Wabag actually won. Do you think it makes sense in light of all of these fundamental developments to go ahead and exit and book profits out of this counter?
The company has been a major leader in the water desalination plants, and yesterday also they bagged the order. But what is happening, like I said, the market's anticipating that the moment they've got the order, the profits are already in the books. But it takes, sometimes even up to 24 months before you can actually realize some of these orders. And profit contributions might be much lower than expected because inflation, there is a cost of putting up these plants, which may have cost overruns. So market seems to ignore all this at the time when the order announcements are made. So I think that you are getting tomorrow's price today. So it makes some sense to look at booking profits for the short term. And whenever the stock corrects from a longer term perspective, you can maybe accumulate the stock, say 10, 15% lower.
There you go. That's Lancelot's take. You're getting tomorrow's price for today. But Lancelot, I'm going to come right back to you for the next one because we do have Sankar who's writing to us from Chennai and he wants to know about BSE. Now, of course, Jefferies downgraded the counter to underperform from hold as well. That's the note that we had this morning. What is your take coming in on this one? Because he has 5 shares of BSE bought at a price of 2,599.
Continue to hold on to BSE Limited because, if you look at the business model, the volumes in the markets are only going to keep improving and growing. And that is going to, enable BSE to keep growing its profits. The other thing is BSE has been also generating income from various other services or allied services that it's providing to market participants and advisors and mutual fund distributors, etc. And that will continue to also grow and propel its profits going forward. So while stock may have gone up in the last year or so, since he's only holding 5 shares, he should wait for some correction and keep on adding, because over the next 4 to 5 years, you'll see significant growth coming back into BSE stock itself.
All right, this next one is coming in from Shrikant. Actually, let me take this one from Balan because it's similar to you've answered BSE. So let me take this to you, Kunal. BSE, CDSL as well as Maruti, our viewer Balan has been making 20 to 30% profit in each of these. Which one do you think you should look out to book profits or hold for the next 6 to 12 months?
See, I think BSE, of course, is one of the stocks which I would suggest to book profits because, the stock has run up exceedingly high. It just last 2 days back also, I think, if I'm not wrong, there was a query, for BSE, the stock was almost at 4,900 levels. It's now corrected towards 4,500 mark. So at such kind of elevated price points, the correction could be sharp, steep and sudden for stocks. So I think in that expectations, my sense is that you could look to book out profits. And in case if the stock dips down again, comes back to say its key 50-day moving averages or such kind of support levels, that's a point where you can look to average further.
All right, so there you go. That's about BSE. I'm going to come back to you, Lancelot, because we do have Bharat who's writing to us from Bengaluru and he wants to know about Tata Chemicals. He wants to know where do you see the stock headed in terms of this particular counter then?
So I think Tata Chemicals, is actually going to see good growth. Its major business has been the soda ash business that has done well, and it has added on additional specialty chemicals business, which is in the process of actually expanding. So that will give it good traction and good profits going forward as well. a lot of the investment has already been made, and we would be seeing many of these capacities coming on stream in the next 12 to 24 months. So one should keep holding on to Tata Chemicals, and you will see the benefits as these products come on stream. You'll start seeing profitability, improve and grow. So one should remain in the growth stocks.
All right, so that's the take coming in on Tata Chemicals. With that, we are out of time on this edition of Buy Now, Sell Now. Thanks you so much, Kunal, as well as Lancelot, for patiently answering all the viewer queries, resolving their queries as well. But with that, we are out of time on this edition of Buy Now, Sell Now. So it's a goodbye from Shreyansi, myself, and the team that put the show together.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.